Hey everyone, hope you're doing well. My name's Drew Creekmer. I'm the Director of Advisory Services here at Creekmer Wealth. And I'm joined by John Creekmer, our CEO and Chief Investment Officer. And John, we're going to talk today about some of the really unique things we do on the investment management side to help our clients know, without emotion involved, but know from a data standpoint, when is a good time to maybe sell an individual stock and when's a good time to buy. And as
Hmm.
you know, we've spent years developing this process and building out some really helpful and unique technology tools to help us do this in a way that's data driven and is very systematized. And so, John, why don't you just start by sharing just some of your big picture experience over the last 30 years as it relates to investing and knowing should you sell a stock or should you not? Why don't you start there?
Yeah, that's it, Drew. That's a great question. And man, over the years, and man, Drew, it's been 33 years. I've been working in this industry, and I've seen everything from markets that just accelerate on the upside to where they come crashing down. And I hear a lot of people talk on a lot of things. And one of the things I hear is, "Hey, the markets is coming down, but you just hold on to it, and it's going to go back up." And I just think that's just a horrible answer to give. I mean, the reality is, we all know markets move in cycles, and you can hold to an assumption that ultimately it's going to move higher, but you may have periods of time to where the markets go flat. I mean, I think 2000
Yeah.
through 2010 is a great example. It's called the lost decade. And back in that time period, the index everyone followed was the Dow Jones Industrial Average, and it actually went nowhere over that period of time. So if you had a buy and hold strategy on January the 1st of 2000 and you just held it for 10 years, you would have had the exact same dollar amount, even factoring in dividends. However, if you had a logical trading strategy that was not emotion based, it was basically numbers based, based upon momentum and based upon finding logical times to protect your dollars and take earnings, and logical times to buy at lower prices, you would have had a substantially higher rate of return. And that played out extremely well for our clients in that period of time. So, Drew, what we've done is we have taken the general principles, and it's so interesting. People say, well, it's simple. You buy low and you sell high. Well, that's easier said than done. But we take that basic principle and we apply it to our models. And so we're looking at individual stock. We look at an individual commodity, if you will. That'll be gold, silver, platinum, cryptocurrency, even. It could be oil, or it could even be an asset class. So look at an index. So an S&P 500, the Dow Jones, or Russell 2000, even international indexes. We actually have put into their formulas that give us insight to momentum. And so momentum, we track what is moving up and what is moving down. And that gives us a fresh understanding of what's happening underneath the market, not just the price. So, Drew, I think let's start at the very beginning, and I'd love it if you kind of comment on this. The first thing we always look at is really that market set up, or what is the market doing, big picture, and we start there before we start breaking down momentum.
Yeah, yeah. And Johnny, there's really two fields of thought as it relates to investment. There's fundamental analysis and there's technical analysis. And so anytime we're starting with a decision, whether that's to buy into an asset class like the S&P 500 or into an individual stock, we always start on the fundamental side. We
Mm,
review the economic data, we review company earnings. We have analysts that work for us to do research into specific companies and their business model and into the individual sector they're in to see what the growth potential is. And once we've done that fundamental analysis, we have a pretty good idea of where that stock or where that asset class is heading in the years ahead. But on the other side of the shop, we have the technical analysis. And John, as you mentioned, this is really built upon momentum. So, how many people are buying into the market or that asset class versus how many people are selling? And there's a number of triggers that we've built out where we will actually get a notification to say, hey, now is a good time to sell NVIDIA stock, for example, or now is a good time to be buying into the S&P 500 because momentum is increasing and price is at a low point. And so once we get those signals, we simply go out and execute upon that for our clients. And John, what we found is one of the most largest risk in investing is emotional decisions.
mm.
And so we want to avoid making emotional decisions. And that's where having that technical data really comes into play and helping us ensure that we're making logical decisions, not tied to FOMO or the market's going crazy and we make a poor, rash decision. And so,
Mhm.
John, one of the things that I wanted to talk about with you, we have a lot of folks that have made great investments over the years into NVIDIA or Apple or Microsoft, individual stocks that have really taken off. And now these folks have a substantial gain. but it's just a gain on paper. So, how would you walk through that decision with someone as to when is a good time to sell and recognize some of that gain as part of your overall financial plan?
Yeah, I think we all need to recognize that you truly don't have profit on any investment until you actually liquidate that investment. Until then, you simply have appreciation in the value of your account, but that's not ultimately realized profit. And so there's always a decision, especially when you have gains that are coming in. When do you actually place a sell to actually realize the gain? Whenever you do that, that's going to trigger the tax consequences. And so the first thing you have to ask yourself is, what is the purpose of the dollars that I have inside that individualized investment? If the purpose is simply to grow wealth and to allow it to grow, well, then you may be faced with saying, I can really stand a longer hold period of time because I'm not as concerned about having access to those dollars. However, if you're saying at some point in the time I may want to actually access those dollars or I'm going to use that money for a specific purpose, well, then you do have to be more cognizant and aware of a need to actually liquidate. And so we have to say, ask ourselves some questions. First of all, Drew, is the dollars that we're looking at, are they going to be taxed and whenever we execute the trade, or are they not? And if they are, then that's going to actually influence our decision making because we have to be aware of capital gains tax, which could be as high under current tax law of 20%, or it could be down to 0%. So that's the first thing you have to consider. Once that decision is made, then we have to look to say, well, what are the dollars going to be used for? If it's used for a specific purpose, well, then we need to say we need the cash in hand. At that point in time, we have to say, when does the time come to sell? And that goes back to your technical analysis, Drew. And we identify with every single holding top targets and bottom targets as far as the sell. And then based upon that, we set limit orders in place and stop limit orders that actually preserve gains as the stock is moving up. If, however, we do not have a specific purpose for the money, we might start to look at additional strategies. And Drew, with that, we actually have a number of different tools. We've actually acquired a tax planning firm, and then on top of that, called Integrity Tax. And then on top of that, we also have resources with specialists in the tax planning area to help our clients determine when is the proper time to liquidate an investment and what is the proper strategy to decrease the taxation on those sales. When it's all said and done, Drew, it's not so much what you actually make, it's what you keep. And so
Yeah.
simply knowing when to execute the trade is only part of the equation. The second part is, how do we execute the trade in the most tax advantage way possible?
Yeah, yeah, absolutely, John. I like how you broke that down into those two key decision factors. So, if you folks, if you're watching this video and you have a highly appreciated stock or another investment that you have large unrealized gains, what I would encourage you to do is to reach out to our team. We have our advisors and analysts standing by who would be more than happy to walk through those two key decisions with you. One, what's the tax complication of making this sale, and how do you keep more money in your pocket by reducing that taxable load? And two, is now an advantageous time to sell? Or what is the strategy that we need to get in place to protect those gains for you? Now, there's a lot of value that can be found by doing that. And you've made a great investment. But now, to John's point, it's about how do you keep more of that money in your pockets and redeploy those new funds to continue further building your overall net worth. So, we'll definitely reach out to our team. We're standing by and ready to help in any way that we can on that front. Guys, thanks for your time. We'll talk to y'all soon.